Wednesday, August 16th. Market analysis, Stan Ehrlich, and 9:49 California time, starting out about correct, the middle of the trading day. And I always start out with the stock market indexes, in particular the SPDR. But I've added the NASDAQ to the futures list today, which has some interesting signals. Okay, we have a new low for the SPDR. Since our bearish engulfing, we picked the high of the rally to the exact day, and we got an ER3 fill and ER1, of course, always ER1 if there's a red or green ER buy signal or sell signal. ER3 does not get filled every time, but we did this time. So new low and a possible new low close. And this time we're dropping a little bit below a bull trend line that goes back to March. It's only got a couple of points on it. So historically, it hasn't been proven to be that reliable, and it's proving not to be at the moment because of dropping below the line and not showing too much indication of bouncing as yet. If the market closes stronger today, higher on the day, especially if it happens to get above yesterday's high and close above that high or more, then the trend line will be much more important, and we'll have a bullish engulfing, and we probably will have a low. That's not happening right now. The 1-minute chart shows us that we just have had a moment ago new lows for the day, and that's a new low for many days, and a little bounce, and now we're coming back down again. It's not like we're down a lot. We're down a half a point, 85 cents, something like that. That's no big deal. Not like 5, 6, 8 points or something. So it would be easy for it to turn around and close a little higher, would be nice. And it could start something, but so far that hasn't happened. I've got almost the exact commentary for the DIA. First of all, all the gaps are closed. I preached about the gaps until a couple of days ago when finally the last one was closed. So I was totally expecting this decline. Now we're trying to figure out how much further the market might go if it keeps sinking, which I've been talking about is a possibility. But there are a wide variety of reasons to expect it not to go much further and to turn around any old time now. One of those significant reasons is the level of overbought and oversold in my custom RSI. For this, the diamond, which has been one of the strongest indexes lately, we're nowhere near oversold. We're still at about 37 on the RSI scale. I love 25 and under for oversold. It doesn't happen that often, but when it does, it has profound results often, more often than not, very often. And the last time this really happened nicely was on March 13th, a major bottom on March 15th. We came very close on the low day on May 25th. Pardon me, May 25th. And sorry, okay, we're coming close, but not that close on the DIA at the moment. But I'll go back real quick to the SPDR, SPY, S&P 500, and we are closer. We're down to 29-ish. And the last time we got to that level, market started bottoming out April 26th. And once we got below 25, March 13th, it bottomed out. Again, getting slightly below, only for one day, 25. The market started bottoming out December 20th of 22. And of course, October 13th, the bottom of the bear market and the beginning of this bull market, to the exact day we got our buy signal. And you can take a look at this on my other YouTubes and so on and see that that's true. So whenever you're getting very, very close to 25, you should be very, very concerned about the market turning back up. Okay, let's look at the Qs real quick. One of the weakest of the group, and that would include the Russell 2000, We did get super close to oversold at 26.29 a couple of days ago. Today, we are just barely getting below that low of a couple of days ago, which would be Monday. And I've colored it with a dashed green marker on Monday because it was so close to a bullish engulfing, which would have turned it completely bright green, and an official signal that this one I'd figured I'd remind myself. We had a low on Monday of 364.70, which did not get below 364.69 on the previous Friday. We needed 2 more ticks lower in order to have an official buy signal, which wouldn't have worked. We dropped below that low today, Wednesday. But again, these are often part of a bottoming out process as opposed to and it is often the high or low day. So I'm telling you in advance, I hope that we are about to turn back up again very soon here. And with the Russell 2000, we are oversold, and we have been for 3 days. Today's the 3rd day. We are below some support, or the beginning of some support. This is a wide variety of price levels going way back to May of last year. So it's over a year's with the big sideways trading range here. And if we start closing above 199, let's call it 200, we're going to have a gigantic long-term major bullish signal breakout. And I'm waiting for that. I'm expecting that. And I think it's going to happen before the end of the year. So here we have it. Oversold conditions in a support area. Prime situation for a bullish engulfing, a bullish turnaround, whether I get a signal or not. We might get a little lower in the short term, the next 1 or 2 days. But the important part is watch for a reversal. Watch for new buy signals. And that is the stock market indexes. Let's go to the futures. The bond market is slipping down a little more. I did get a buy signal that was good for several days, a week and a half or so ago. It was very close to a support area. Not quite. Now, yesterday, we finally touched the support area. We're having new lows in price, but we're not having a new low in the indicator, the RSI. That could end up being a divergence. So bumping into support, almost oversold. Look, 26.14, come on. And the lows for the day is 25.33. So we only need to make new lows by a very few ticks to probably cause it to turn yellow, which means oversold, and be a prime candidate in a support area for a bullish reversal. I'd love to see that. I'm looking for a rally right in this time frame, hopefully in the next few days. I'm not getting it yet. This is supposed to be in the time frame for a rally high, and there's no indication of that whatsoever so far. But it's setting itself up for one, and they could happen very quickly. So we'll see if this cycle high, and that would be the red zone, the window of opportunity, the woo, which is going to be at its prime middle Friday, the 18th. Yeah, we'll see what happens. Next, we've got the NASDAQ. First time I've had this chart in here. I've usually concentrated on the spider. We got 3 sell signals on the E-mini. I'm sorry, this is the E-mini. We'll get the NASDAQ second. Or is that out of sequence? Just a moment. Yeah, that's coming next. The 3 sell signals in the S&P 500 because, and that would be the E-mini, because the extended trading hours allowed for the market to rally up more and break down more than the spider, which has a lot shorter trading hours. Okay, they worked fantastically. We are now at a major bull trend line, which is the bottom of an upper slanting channel also, and almost oversold, 29.32. So maybe a little bit more to the downside. So it's getting very, very close again to generating potential great, I hope, buy signals. So let me go to the NASDAQ now. And we did get a bullish buy signal 2 days ago on Monday with the NASDAQ. But we're now lower than the low of the signal day. That kills the signal. So we have about a 24-hour swing trade, small loss. And we're now flat at the moment, watching for new buy signals. We're close to oversold. We were oversold on Monday, and that's why we were allowed to turn the price green and official buy signal. It didn't work. They don't all work. So I'm still watching for new buy signals. Generally speaking, an area of support, not the greatest, but I'm liking what I'm seeing so far. Not screaming bloody murder yet. Next chart is going to be the bond chart. Oh, these are definitely way out of order. Sorry about that. Huh. Very strange. Well, I'll just go through them. Having an outside up day in sugar, bullish engulfing, not oversold, nowhere near it. So I'm not getting a green bar, but it does imply the market's going to rally short term. You would expect at least 2460 and maybe up to 2530. Longer term, I frankly still believe we're going to get down to around 20. Next chart happened to be the NASDAQ. Here we go. 2 days ago, we got a bullish engulfing official buy signal, but it didn't work. Today, we dropped a little bit below the stop, and we have a small 24-hour losing trade. Now I'm waiting for more buy signals if the market will generate them. We did get 2 sell signals in the process of making the top of the market, not the highest high, unfortunately. Even these sell signals offer good profit potential, but obviously not for more than 1 or 2 days. The same with that signal. It looks like they didn't work, but you don't know how they acted the moment they got short for ER1 and what happened to the end of the day and in the next day or so. Then you could have easily, an automated trading system, my ER system, ER signals, gotten out with a profit. This one does not look that way, but these two certainly do. And of course, we got the October 13th bottom of the market with buy signals. Where is it? Over here. Sorry. At the bottom of the bear market and the beginning of the long-term bull move. And that one's a fantastic buy signal also in the NASDAQ. And it created essentially a broad double bottom from October into January. Nice. Damn nice. We actually got both major lows on a broad double bottom, the end of the bear market, beginning of the bull market. Next chart. E-mini, we've talked about that. And the coffee market is at support, oversold, prime target for a bullish engulfing, which we have not gotten yet. So I'm looking for the beginning of a rally. Next, bond futures, new low closed potentially, dropping a little bit below some support. And I'm going to drop this line down a slight bit here to correlate with these lows back in October and November a little better. So we are still there. It's a doji today, an inside trading range at the moment with a new low close, maybe. But I think we're very close to a buy signal. We did get one a week and a half ago. It worked for a few days, plenty of room for a profit potential. Not all of my signals are like October 13th for most stock market indexes, the beginning of a mini month bull move, and we're not over yet. So looking for a turnaround, a beginning of a bull move in interest rate futures. What about the 10-year notes? Here we go. Oversold, doji today so far, slightly lower quotes. I think it's going to turn around and start to go up very soon. Now we have dropped below support and made it new lows a couple of times now for the whole darn trend long term. So I don't have the same thing to say about the 10-year notes at the moment as I do about the bonds, but both look like they're about to turn up. Next chart. Crude oil sold the top. August 10th. High day, bearish engulfing red. every day since we got short at almost the exact high of the day. We wanted to go short at 83.70, and that was for August 11th. We got a rally high of 83.81. Gee, I missed by 11 ticks. Closed with a profit on the first day, closed with a bigger profit second day, a much bigger profit the third day, and today's the fourth day. Looks like another profitable, increasingly profitable new low close since we sold the rally high. This is a great classic ER signal combination. Drop dead perfect so far. Just wished it would have come down faster. That's we all do. Next, overbought conditions caused it to turn down, and we're seeing it continue to break. But now heating oil is coming back into an old support resistance area, and this could be support. We'll see how it acts from these prices right now on down to something around 2.9, which I think it's going to still come down to. I have no reason to change my mind yet. We are looking for new lows still, but not necessarily a big crash. Next, big reversal yesterday in natural gas. Working great. ER1 got short at approximately 2.7.5. Closed with a very nice profit yesterday on our brand new short position. Today, opened approximately unchanged, worked its way a little tiny bit higher for a moment and dropped off into new lows. So on the second day, we're holding the short. We're beginning to lock in a profit potential. Actually, we could have done so yesterday on the ER1, but we don't have an ER3 short, which needs to come back up and touch those red dots. So ER1 is short and doing very, very well. We're now nowhere near oversold, so I'm looking for a move down to, probably 2.4, 2. Even 400, 2.400. Looking for a lot lower. Yeah, 2.465, certainly in the ballpark. Next. Oversold now for 5 days and quite oversold at 17, way below 25. Should, could, and is likely to turn back up at any moment. We did break below longer-term support, but there's even more major historical support levels. And I'll put the line in right now so you can see what I'm talking about. Whoops, I didn't want that one. I wanted this. Oh, doggone it. And I'll use a horizontal line, and I'll drop it right there. So we're looking for 1,888 for a major support area. But the problem is you've been oversold already for 5 days. I don't think it's going to have that much momentum to get down that far on this particular break. I think it's going to bottom out any old time now and have a decent rally, probably back up to 1,950 and maybe even a little bit more than that. But the trend is neutral to south. Tierra del Fuego, land of fire, slang for head south. It's like go to Alaska, head north. Anyway, what about silver? Oversold, double bottomed out, June lows and yesterday's lows, but still not showing the follow through to the upside I would be expecting. Lower on the day by a little, approximately in the middle of yesterday's range, at support. So I'm thinking it could bounce back up again at any moment. And the bounce really shouldn't go too far. I think maybe 23.5 about do it. Can't tell right now. We'll see what happens. Next, platinum had been oversold and is very close to oversold. But in the last couple of days, yesterday and some part of today, we have been in new low ground since way back in last October. So almost a full year. But not that badly. And the closing prices have been at the previous lows, very, very close to those. So we're not getting the follow through yet that you might expect for new lows for many, many months. So this is also prime for a bounce up to, I think, at least 922, 923, and maybe even more than that. Let's see if it'll start to bounce first. Next, oversold 2 days in a row in high grade copper. I obviously have to tell you, I'm thinking it's about to bounce, and we'll see what happens. There's a chance it could slip off toward the 3.5 area and double bottom out against the May lows, but we'll have to see what happens. I'm thinking it's don't go short here. That's for sure. Look for buy signals, reasons, excuses to be a buyer, whatever tools you like to use. Next, soybeans. Extreme, major, historical, profound support has so far on August 8th stopped the decline. Now, we did get a sell signal almost on the high day. That worked great. Now we're looking for a move down to the support area because of that reversal. It did it, including another bearish one on the way down. So it's bouncing, but not very profoundly, not very aggressively off of that support blue zone here. I'll expand it out a few more days. And I need to see a close above 1341 in order to get a little bit more excited about an attack of 1437, the top of the market, 35 area. If we get up there and close above those prices, the highs, the bearish reversal that we had before, we could see a wildly bullish long-term breakout. On the other hand, and I've said this for the last few days, almost every day, I believe, this is a very critical time and price. You can see the market's getting stuck between the highs all around the same prices and the lows all around the same prices. And that area is just above support. So from a bearish point of view, if we start closing below the low of today significantly, we might end up with a lot lower breakout, longer term. Next chart. This is the bean oil. There's that head and shoulder possibility I started talking about yesterday. I allowed for a little bit more of a rally. This is a little more than I'd like, but it doesn't kill the formation. Although it does make it a little lopsided, it's still not a bad potential head and shoulder. We just simply need to fail on the rally now and start to head south, making lows lower than today's lows. And yesterday and the day before, getting close to the neckline, which at the moment is around 57.75. Breaking out to the downside should, if the formation works correctly, produce a minimum downside move to about, I don't know, 51, 52. Next chart. Soybean meal. Yeah, don't know what to say. Slightly bearish, looking for a challenge of support at 364. Next chart. Corn has broken into new lows for quite a while and tested the very important lows that were made back on July 22 of 2022. So being in a current oversold condition and showing some signs of reversing, today's low is 462, and unfortunately yesterday's low was exactly the same. Therefore, we don't have a bullish engulfing potential. You need to have a lower low. And when there's a double bottom like this over 2 days, it looks a little bullish. It's doing the right kind of thing, but I'm not going to get a green buy signal if you get over yesterday's high. I needed something below 462, and we just didn't quite do it. About as close as you can come. Next chart. So I'm looking for a bounce. Wheat, also looking for a bounce. And today it did get below yesterday's low, and we are oversold for the last 2 days, yesterday and today. So this is a very primed situation. Momentarily, we're about unchanged. I guess we're up a tick or two or something. Yeah, hardly anything. 2/8. And I need to get above yesterday's high to produce a green official buy signal. But I like what I'm looking at from a friendly or slightly bullish point of view. Next, slipping a little bit more in cattle, we got the top of the market. That was back on July 20th. And we're very close to making some new low closes. And after that, probably new lows since our major buy signal. Sell. Whoops, Freudian slip there. Sell signal. Next. New lows to the move down. Still staying bearish. Getting close to oversold in hogs, but not quite there. If you are short, I would be looking to tighten up your buy stops above the market and capture a little bit bigger profit, but don't necessarily jump the gun. This could come down more for the next few days. It's got support, and not the greatest amount of support, but around 75.5. So that could very well be significant. Next, we're looking at a whopping rally today in OJ. I talked about the possibility of the bearish engulfing, which had been the top of the market for a few days, and a reasonably decent profit during a bull market on a perfect sell signal, again, on the high day. It's important if you're fighting the trend to get in at a really good level. Otherwise, your profit potentials are probably limited. This is a new high, but again, overbought. So again, I think we're coming close to doing exactly what we did back around the end of July, back around the end of May, back around the beginning of April, and frankly, another similar situation to some degree is the beginning of February. So don't go long. You're too late. I didn't get any buy signals, unfortunately, and we never got very oversold. This is frankly looking like a little bit of a blow off top starting. It might jump a lot in just the next couple of days. That's what's called a blow off top. Acceleration, extreme big moves up, gapping up. We gapped up this morning. And very, very overbought situations, which we had about 2 or 3 weeks ago. And it worked a little bit, nowhere near as much as I expected. Next chart. Cocoa. Gigantic bearish sell signal. The next day, it just broke down huge. Great combination. We got oversold. I told you it probably would bounce. It has. We just might be finished with the bounce. Today's an inside day. I can't tell yet. I'm looking for sell signals, waiting for a little bit more definition of which way to go. Next, cotton. At resistance and overbought. It turned down. Unfortunately, no red signal, no bearish engulfing. So we're now in jeopardy of breaking down and closing below the lowest lows for the last few weeks. Usually a bearish indication. If that happens, and I think it will, then we're probably going to be coming down to about 76.80. Next, sugar to sweet. Outside up day at the moment, and probably will stay that way. That means the close is going to be higher than yesterday's close. You can't change the high and the low. So a little bit more of a rally might occur, but longer term, I'm still looking for 20 something. Next, we've got the natural gas, and I meant NASDAQ. We're back to the beginning, and thank you very much for your time. Talk to you tomorrow.